Hi traders, this is Nenad speaking, and today with FXDD we have another live trading webinar. So as you know, yesterday we had a very successful live trading. Dollar Swissy was just few pips in profits, while dollar yen went some 35 pips from our entry. And I hope that you also booked your profits. The recording can be of course found on FXDD YouTube channel. I hope that you're enjoying our live trading. And before we start, of course, have in mind that foreign exchange trading carries a high level of risk that is not suitable for all investors, and the leverage creates additional risk and a loss exposure. Before you decide to trade foreign exchange, try to carefully consider your investment objectives. Everything you see here is my personal opinion only, okay, and my trading ideas. Also, have in mind that you can register for educational webinars here on this web address, and also for more live trading webinars. 50, it will probably go down to test this zone, and it means that euro dollar then will spike to the upside. Now, regarding my other trades, possible setups, Australian dollar also is interesting to me because these are all rejections from this spot. And you can see that the price is below weekly L3. It means also that the price on 4 hour is actually below monthly H3. So this gives me, well, I can say some cues that we might see a continuation of a downtrend. So the only thing, it's very slow pair. You see here 26 versus 46 last 5 days of trading, extremely slow pair. So we can try to do this now if you want to enter, but it's very slow. You need to protect it. So I will enter with a small lot here now. Let me open a small lot. Okay, not a big risk, guys, here. Trying to get to 70.90 here. That would be take profit. Again, I need to tell you a very important thing about levels, and 71.60 is okay. I would say 60 add a few pips of spread, so it's 2 pips spread plus 7 pips. I would say, yeah, let's go to the full projection. Not a big stop loss, not a big risk. So the only thing here is if you see that the price is dropping, I would definitely scale out or move my stop loss in profits once the price gets, if it gets to 71, below 71.20. So at least when 12, 15 pips can be secured, just move your stop loss or scale out and put the rest to break even. Why I'm saying this, guys? Because many traders simply cannot understand the full force of the ATR. This indicator here, the ATR indicator, you can see it here. It's extremely important, guys. And you see, not each pair is traded the same way. If you have 46 pips, it's okay to take 15 pips profit, because 46 is the average true range in last 5 days of trading. Contrary to that, GBPN, you see it's 158 pips. So you see this potential trade. So if you trade GBPN, it's good to have 60, 70, 100 pips of profit. But for slower moving pairs, such as the Australian dollar, even euro dollar, guys, only 37 pips. Well, if you take 15 pips, you already took like almost 50% of its ATR. Don't be greedy. One of the reasons why traders are not successful, they don't know how to trade. They don't know when to exit the market. One of the most important things that I have learned through my trading career is knowing when to exit. And that is why the ATR indicator can help us. It clearly defines the range. I used 14 days, but I can also use 5 days if I see that the market is very slow. I will just switch to this present week and trade what market gives me. I don't care really if it's 300 pips range or if it's 30 pips. Based on the ATR projections, I will also base my exits. And that is one of the reasons why I have a successful trading account. So here, and you can always check it at myfxbook.com or ask for a spreadsheet to see which trades we took in front of our live members that we also do. So one of the courtesies of this webinar, trading webinars, is, guys, you see me live in action. Okay, I don't have anything to hide. Clear entries, stops, targets, everything is here. The only thing that you should do is manage your trades once we actually exit the market. You need to manage your trades, guys, once we finish with the webinar. So this is the final TP 7090, and I can say it's nice 7097, so I would say 71 here, the target. You see the ATR, but you need to manage it yourself also. So if you see that the price is dropping and it's dropping here, don't be greedy. Move your stop loss in profit, or scale out for some 13, 15 pips, and then move the rest to break even, securing a free ride. Most of the times, markets are ranging, going up, down, most of the time. Only 30% of the time, a market is trending. So when you see the ranging market and you have a trade, don't be too greedy. Just take the profit, scale out, or just move your stop loss to break even +1. So you will be riding a free ride. That is very, very, very important, guys. I always protect my trades, especially when I trade during the day, intraday trading. Okay, so Australian dollar, GBPN, as I said, and I did the analysis for GBPN, I would go long if the price gets here, 150, if it drops, of course, it needs to drop almost 100 pips and make a reversal pattern here. But that is a good chance for us to go long. So yeah, I would definitely go long there. Also, I'm paying attention here. We missed this one, but this was a good one here on the rejections. Now it got, you see, almost completely to the ATR. The GBP dollar is really, really going up. It's close to being a potential counter trend trade. So if you want to trade the GBP dollar, wait for the price to settle around 30.60, 30.80, and makes a divergence. When you spot a divergence, okay, just draw a trend line like this, okay? Or if you want to trade it early, then just draw a steep trend line, wait for a trend line cross, or wait for a MACD to cross over. That is how you trade the divergence. Divergence in counter trend trading is very important. So once more, wait for the price to settle up in this region, 30.60, 30.80. Then wait for the MACD to cross or a cross of a trend line. And with that, you actually can enter a divergence trade that is effectively a counter trend trade, and you can actually, well, you can make some profits by trading counter trend, okay? Okay, so if you have any questions, guys, just feel free to ask me. As I'm saying, this is a very, very nice opportunity for us, but we still need to wait for the price to sell up and form a divergence. When the divergence is formed, then wait for a break. Currently, we have the Australian dollar running. I would say that even if it gets here and makes a reversal pattern, I would add one more trade, because I explained yesterday, scaling in is very important, guys. When you scale in, you effectively, your profits will go exponentially up and your losses will go exponentially down. So try to scale in, practice scaling in and scaling out. It's really, really very important. Also, if you have any questions, guys, just feel free to ask me. I will definitely try to answer all of your questions if anything is not clear. Pacific crosses such as the Australian dollar and New Zealand are usually best traded during Tokyo session, because the Australian dollar is very dependent on Chinese markets and on copper, while yen pairs are very tight to Nikkei index, okay, Chinese A50 market also. Yen especially is very, very suitable to trade along with equities. So guys, if you're an equity trader, if you like to trade DAX, SP 500, Nikkei, then pay attention to yen pairs. Usually the Australian dollar yen moves along with the equities. They have a very, very positive correlation. Daniel is asking about the GBP Australian dollar. Okay, let's see the GBP Australian dollar. Oh yeah, huge uptrend here. You see, this was a signal to go long. But as I'm saying, for these guys, you really need now to trade counter trend. Again, I would wait for the price to settle up in this zone here between daily H4, even here, guys, somewhere here between daily H4 and daily H5. It's between 83.00 and 83.98. Then when the price settles up, again, watch for divergence and either trend line break or MACD cross. That is the way how you trade the divergence. But similar to whole GBP basket, the GBP ODI is setting up for a counter trend trade. So I would wait for a confirmation, divergence, trend line break, MACD or MACD cross, and then trade it counter. Because you really need to know that when there is a strong trend, it's pointless to short it against big money. Guys, if you want to be constantly profitable, primary thing is you need to be with a trend. Trend is made by big fish, by shark. You need to follow the shark, because if you go counter the current, counter the shark, you will be eaten out. So follow big fish, follow big money. That is what I have learned throughout all these years, and I'm a mostly trend follower. But when I see that the price is at their extremes, I dare to enter a counter trend trade. But it's not my primary way of trading. Okay. Moshe is asking about the Swissy. Okay, the Swissy. For London Open Advance, please wait for Camarilla MACD webinar. We are now going with free webinars here, live trading. Okay, dollar Swissy. I was stopped out for some, on this account, I closed for 3 pips. On my other account, I closed it for some 15 pips because I had an overnight trade. So now, again, this is ranging market. The price can go up and it can reject from this spot. But then again, general trend is to the upside. The price is in above monthly H4, so it still has the potential to go to monthly H5. It's very bullish. While on 1 hour chart, the price all is pointing to the upside, and Camarillas are also pointing to the upside, at least towards weekly H3. So what I'm trying to tell you, this is ranging market, bullish ranging market. It's bullish, but it's ranging. So as I'm saying, 3 pips here from yesterday trade. On this account, 35 pips on dollar yen and 15 pips on my other account, okay? Yeah. Okay, Renu is asking about the gold. So XAU USD. As I was saying yesterday, you could have seen the rejection at this spot. And Renu, I remember you asked me, I think, about the gold. And if you shorted it here, well, a nice spot to go short. Now, again, this is setting up for a counter trend trade. Wait for the divergence. Yeah, thanks, Renu. So wait for divergence here, okay? Bullish, regular bullish divergence. Then we don't have a trend line here. Wait for a MACD cross or some strong reversal pattern here in this zone. If it happens, gold will go up. The usual correlation between the gold and the euro dollar is positive. So euro dollar down, gold down. That is why gold is a contrarian to the dollar yen especially. Yeah, and you see the correlation between a euro dollar and the Australian dollar is also positive, and the Australian dollar is going down nice. I think that really, if the price makes a reversal pattern here, I will add one more position because I really entered with a small lot, and I'm not greedy, guys. Really, I'm not greedy. You can see how I trade. I will enter with 0.10 more if I see a reversal pattern here, and my stop loss will be the same, 7166. I won't be moving my stop loss It's called scaling in. That is, guys, professional trading. Don't be a simple retail trader. Okay, next thing, as I explained, the gold, Renu, gold is going down here. This could have been a potential entry. It wasn't signaled by the MTF template, but then again, discretionary trade could have been made here. Nice rejection. This is dark cloud pattern. Here, wait for divergence. When divergence forms up, yeah. Actually, yeah, just guys, give me a few seconds just to type the answer to. Okay. So, yeah, okay. So do we have a divergence here? I would say, yeah, a tricky one, but I would say that, yeah, we might have it here. Here, the same spot you need to find here. Yeah, you see, it is the divergence, bullish divergence. So you can try to see where this candle will close. If this candle is a bullish pattern, if it closes as a bullish pattern here, let's say an engulfing candle or piercing line or a form of Marubozu, if it doesn't go too high, then trade it. If it goes too high, wait for a retracement. It's called high volatility trading. That is what I will be teaching you on my educational lessons with FXDD. So sign up for educational lessons. One of the methods that I will also show you during future lessons is the high volatility trading. So if this candle goes up and closes as a Marubozu, big bullish candle, wait for a retracement to 61.8, 78, or 88.6, and then open a trade. Or if this candle is a piercing line or other reversal pattern, you can also go long based on divergence. You can also go long if the MACD crosses again with a bullish histogram. So also that is regarding gold. Currently, we have one trade running that is a small profit, but profits are profits, guys. So the Australian dollar is going down now nicely. Okay, do you have any other questions, guys? If you do, feel free to ask me. Of course, I'm here to help you out. So I won't be making any more trades today, only this Australian dollar. Again, if the price goes here, makes a reversal pattern, add one more position. Keep stop loss tie, 71.66. You see, I'm trading from FXDD platform. So this is valid here, what I have written here. TP finally 71. But if the price gets here, move your stop loss. Let's say you can scale out or you can move your stop loss like 15 pips plus 15 pips. If you do it, you will be securing a free ride. If it goes down more, then even better. So you can do it like that. I already taken a sell 71.32. I would say a valid sell, Renu, is in between 71.30 and 71.5. Stop loss is 71.66. Final target is 71. But manage your trade, guys. Market is low. When you're trading intraday during the day, you see the ATR is crucial, guys. I'm making live trades also based on the ATR. It's crucial. It's not the same as if you were trading the GBP crosses, guys. You see the ATR. You see where my cursor is. 127 for the last 5 days on GBP Swissy. On GBPN, last 5 days, 158. So you don't take 15 pips on those pairs. Only if some news is expected, then you can do it. Otherwise, you can do 30, 40, 50, 100 pips if you want, with scaling out, as I explained. Similar with the Australian dollar, just the opposite. You don't go for 50 pips because the ATR is 46 pips. If you take half of this, like 20 pips, it's good, guys. Don't be, just think what I'm trying to tell you. 95% of traders tell you, okay, we have a system, let's trade it. We will trade with 30 pips fixed target price and 40 pips fixed stop loss. It's nonsense. There is no 30, 40, 50 pips target. It's based on the ATR. You cannot place a fixed target. Set and forget systems simply don't work today. You need to base your targets on the ATR. It's not the same for the Australian dollar, for the euro dollar, nor anything is not the same for these Forex pairs, guys, here. Why did I take 18 pips? Because the ATR, 37 pips on dollar Swissy. So I took the 50% of ATR. It's great. Now imagine if we had taken the half of pound yen, right? 70, it's 158. So it's like 179 pips. Wow, 50%, guys. We will talk also about the ATR in our school that I'm doing, and I started with the FXDD. So stay tuned, guys, to all these important webinars. I want you to be profitable. That is my mission, guys. I want you to be profitable. Okay, the GBP dollar. I already explained it. Wait for divergence, okay? Then trade either a trend line break or MACD cross in this zone. So in between 3060, 3076, first, wait for the price to consolidate. Okay, so you need to wait for the price to start making some consolidation moves. And then place a trend line. We have this steep trend line, okay? Maybe you will need to move it when price sells down. Wait for the divergence and then trade a trend line break, a reversal pattern, or MACD cross. I would say GBP dollar after, because it already overshot. No, it almost completely went to its ATR projection, 122 versus 125, 3 more pips, and this will be taken out. So wait for divergence, trade a trend line cross, reversal pattern, or MACD cross. That is how you trade the divergence. And you need to treat this trade as a retracement trade, guys. You are not going with a trend, so be careful. Protect your profits once price hits, let's say 30, 20. Protect your profits, guys. It's important because you can be stopped out because this is a trend. You're going against the trend if you want to short. If you want to go long, there should be a huge drop towards 29.15. Only then you can go long. But I don't think it will happen except if there will be some major news. And well, you see that all markets are ranging most of the time except for GBP crosses now today. I don't know if it will drop, Renu. The only thing what you can do is wait for the price to consolidate, okay? Just to stop moving to the upside. Then, when divergence forms, okay, there should be some, this is not a divergence, but it could be soon. Wait for a trend line cross or MACD cross or a reversal pattern here. Some sort of, let's say, a pin bar, shooting star, you can go with the engulfing dark cloud is one of my favorites. Wait for that and then you go short. If it drops, it can drop here, there, and then shoot up again. This is order block. If you read my analysis today, I said it could also jump from this order block here. This is the previous high. Price tends to retest previous highs, important highs such as pin bar highs, guys, and lows, of course. I mean, so many things, guys. I know that this is something new for you. Usually traders, mentors, teachers, call them whatever you like. They explain some things, but they simply don't take into account price, now moment price versus historical price. That is one of the most important things. That is why I use order blocks. This order block is retested today, has been retested, and that is why the price went up. Read my analysis on the GBP dollar today. So wait for this retracement trade, but treat it as a retracement, counter trend trade. Only trade in a trend if the price makes a reversal pattern from this spot, 30.00, or it goes down. That is when you make a long trade. You should always be patient. Wait for the price to come to you. Do not chase it, because if you chase the price, it's like a shadow. You cannot chase it. Stand still, it will come to you. Always like that. Remember, guys. Okay. So that would be all for today. Australian dollar trade running, okay? Wait for the price to go here, then protect your trade, move your stop loss, or you can close your trade for 15 pips. It's okay. Final target 71.00. If you want to go for final target, scale out, put the rest to break even, or just move your stop loss to plus 15 pips, and then you will be securing a free ride. Thank you, guys. I wish you a great trading day. Stay safe, trade safe, and see you soon. Cheers, everyone.